Hey everyone, this is going to be a lecture on turtle soups and how to simplify that because there's a lot of, let's say, talk online about turtle soups and sort of how it's enigmatic and it's almost like a secret method of trading. But it's really simple when you look at it and when you define it. And essentially, all you're doing is trading a false move. So, smart money, as ICT mentions as well in his core content, smart money has specific orders sitting at specific liquidity levels, right? Keep it simple. In order to fill those very large orders, they need to purge liquidity. So let's say they want to go long, for example, in the picture here on the slide. In order to fill their orders, they are going to purge any sell side liquidity before dragging it up to their target, which in this case would be buy side. Now, that is essentially what turtle soup is. It is just false moves and false breakouts. So the breakout traders, which we're all retail, no one here is an institutional trader, at least not that I know of. But most retail trade support and resistance. And they see support turn into resistance because of a move like that in the picture right here. And they're going to short. That's just how retail logic works, right? Most people's minds work like that when they first learn about trading, or maybe they're trading an EMA and they say, you know what, support failed, and now there's a cross of EMAs or MACD, and I'm going to short here. But smart money, institutions, market makers, they are filling their orders there. Okay, so lecture one, right here, we're going to talk about the ingredients of a turtle soup, and then what I'm talking about right now, what is a turtle soup and how are we defining it. And then in lecture two, we're going to go into a bit more into the anatomy of price because many of you have been studying time with these time models, which is amazing. But in order to understand turtle soups and create low risk entries and follow these institutions with their trades, we're going to have to understand the anatomy of price. And what do I mean by that? We're going to have to learn how to read candles specifically. Now, turtle soup is nothing new. Doesn't matter who or what guru you follow online or you see online. It's nothing new. The origin actually comes from a trader author, Linda Bradford Rasch. Not sure if I pronounced the last name correctly, but she published a book long time ago called Street Smarts: High Probability Short-Term Trading Strategies. In that, it essentially talks about turtle soups. You're essentially trading the breakouts, the false moves, right? So most people would short on a support that turned into quotation marks resistance, but smart money, that's why the book's called Street Smarts, they long that. And so that's something we want to do as well. Now, a quick notation about that book cover. You see the candles on there? They're not regular candles, and that's for a specific reason. They are open, high, low close, open, low, high close as well, candles. And this is all meshing together, but that's how you include price into this. And we're going to talk about that in depth. Now, the recipe. This is an actual picture of turtle soup. Just decided to put that in. But let's keep it simple. What ingredients do we need? We need time. It needs to be the proper time for a reversal. And we know the times now. We know New York session time models, and we know weekly session time models. And when there's a confluence of two, as we know, there is a higher probability of a reversal. Then we also include SMT. So the only discrepancy is stocks. Stocks, they don't have pairs, so they don't have SMTs, and you'll just have to focus on time and price for those. But for crypto, forex, indices, they all have a respective pair that you can create a SMT with, right? Before we continue into this lecture, there are some terminologies that you'll have to understand, but I will briefly touch on them, and that's the open, high, low, close profile. ICT talks about it as well, and it's nothing new. Then there's the power of three, which is meshed with that as well, and accumulation, manipulation, distribution. That's pretty much all it is with price. Just keep it simple. So that's price. Now, when it comes to SMT, as I mentioned, futures, they have their respective SMTs. So you're going to be comparing the NASDAQ with the Dow or the S&P. Forex, you're going to be comparing the Euro, USD with a different pair. Crypto, you're going to be trading Bitcoin maybe. You're going to compare Bitcoin with Ethereum on the actual charts. So let's say Bitcoin took a low, but Ethereum did not. Then, as I mentioned in a post online, you're going to want to trade Ethereum because Ethereum is going to have more volatility since it's the one that took out the low. But everything has a respective SMT, okay? And turtle soups, yes, you are using time and price, but if there's an SMT, it creates a higher probability of a reversal. Now, time confluence. We talk about this all the time. And the more and more we talk about it, it's going to become a lot more clear. Let's say, first, before I begin, you must understand the daily and weekly profile. So the power of three, right? And I will talk about that in this lecture. But let's say you are trading time models and you're trading the weekly session. Eckhardt did not create much of a move, and instead it just created engineered buy side. Aries then takes out a low from Eckhardt, and then it pushes up towards buy side. That right there is a turtle soup because price took out that low and then it pushed up towards buy side. Just imagine that. But now we have time, and we know the times for a reversal. So we have a time confluence. So Aries, there's an inner interval, and let's say that inner interval coincides with a New York session time model, maybe model 11. So now we're using model 11 for a turtle soup, and it's going to become over 90% probability that you will be right because you're meshing all these ingredients together to create a turtle soup. And you know the time confluences with each other. You know Ash Wednesday has a confluence with Model 110. Icarus, for example, has a confluence with Model 1001. And this happens throughout the entire week. Now, when it comes to price, it's a higher time frame PD array that gets hit and a lower high. So buy side or sell side gets purged, as we talked about earlier in the lecture. It's simply based off a range. Let's keep it simple. But in order to distinguish that and know what area we're supposed to be looking for a turtle soup, we must understand price and the open, high, low close, as well as the open, low, high close, and the power of three. The power of three, let's keep it simple, is just accumulation, manipulation, distribution. That's it. And I think most of us are well aware of what that looks like now, right? But we're using the open and close of candles in the bodies. That's essentially the bodies of the candles. You see me talk about that during live streams, and we talk about that in perhaps in previous lectures, but the anatomy of that is very important when it comes to the candles. Because let's say on this slide, for example, this candle opens down here because it's a bullish candle and it closes up here, right? But let's say the previous candle was also bullish and it opened within that same area right here, the same vicinity. You're going to want to long anywhere beneath that previous close of the candle. So if the previous candle was bullish and it closed over here, this candle's opening at the same area. Anywhere down here, because price is bullish, you're going to want a long. So this is the area you're going to want to place a trade at. Opposite for bearish candles. Let's go through a few actual examples on TradingView just to make this a bit more clear and to make this a bit more simplified. Let's say you are trading the same setup that we have here. Now, on the 1 minute chart, it might look like this, right? And there is some form of sell-side liquidity down here. Market makers, institutions, smart money, they're going to want to take out that low to fill in the orders, as I mentioned, and that's your turtle soup right here. And they're going to drag it towards their target. In order to do that, in most occasions, they're going to engineer liquidity. So here, they're engineering buy side. And we talk about this all the time. Low resistance liquidity, right? Most people are going to try to trade numerous times. Oh, this low got taken out. I'm going to enter a trade here. There's a market structure shift. I'm going to enter a trade here. But focus on the larger picture. On the higher time frame, sell side liquidity is sitting way down here. So be patient. Now, this same setup here, we're going to be using this same setup here before we go to actual charts to talk about a few aspects of the lecture that I talked about with Turtle Soup. So we talked about how the engineering liquidity to take out a low, they're filling their buy orders here, and most people are saying, oh, support turned into resistance, time to short here based off my VWAP, BMAs, whatever it may be. And then you get this V-shaped recovery, and most people get scared, pissed off. What the frick happened? My short position is now red, etc., etc. Why? Because institutions are filling the orders right there. So that's the fundamental aspect of this. That's how institutions are working. Now, when it comes to time, let's say, for example, don't pay attention to the time down here, but let's say, just for the sake of this, I'm going to draw specific time intervals and pretend there's a time model here. Let's say we are trading model 110 on the New York session, right? So now we know what time, and all in due time, I'm going to talk about actual data that I'll release later on that shows the higher probable time models throughout the week that are going to have a reversal. But let's just say, okay, we understand the fundamental aspect of the turtle soup. Institutions are trying to fill their orders in, right? And now we're using time. So now we're in model 110 territory, and we have this higher time frame PD array, sell side liquidity. So we have inner intervals here that we're observing when it comes to time. And then we have our root candles, remember? 1110 and 1121 for model 110. Anywhere beneath that, as we talk about with the time models, is going to be discount. But then we're looking at the higher time frame PD arrays. There's sell side here. And then we understand we're in model 110, so we can expect a reversal here. Perhaps a buy model or a market maker sell model, right? Very simple. We now have the fundamental aspect of turtle soup. We understand time. We're in model 110 territory. And now let's dissect price a bit. Before we actually go to actual candles, let's dissect price here. What is this going to look like on the higher time frame? So let's say we're observing the 15-minute chart or the 1 hour. Price opened up here. This is the open. Remember, we're talking about open, low, high, close, because this is a bullish candle. Price open here. So anywhere down here, we're going to look for long opportunities. So now we have the higher time frame candle, the open. Price then proceeds down. This is now the low of the higher time frame candle. Price then pushes towards buy side at the end of model 110. Magical turtle soup here. And it pushes up and closes somewhere around over here after forming a high. And it closes somewhere over here. Close. So as we talked about, we're using those three ingredients as well as an SMT. Let's say you're trading NQ, and then right here, there's an SMT with ES, S&P 500. So let's say right there, there's an SMT. So the S&P took out that low, but the NASDAQ did not. Remember, which one are you going to want to trade? The one that took out the low, because it's going to have more volatility. So in this case, we're using the S&P 500, took out the low, so I'm going to trade this because this is going to have more an injection of volatility at a specific time. So we looked at the fundamental aspect, then we looked at time, then we dissected price, the open, high, low, close candles, and what would this look like on a higher time frame? It will look something like this on a higher time frame. So what do we have here? We have market makers creating buy side. We understand we're in model 110. We get that SMT. We take out that low. Breakout traders are going to short here, but not you guys. You guys are going to long. We long. That's our turtle soup. Then we create a low risk entry. Maybe you wait for a fair value gap inversion, or you have a set stop well below the low and you're targeting buy side, and you get this type of trade here. But when it comes to the higher time frame candle, look at the anatomy here. As I talked about, we opened right here. They create and engineer liquidity. The wick does the damage. The body tells the story. What is the body doing? Closing above the opening price, and it wants to continue further. That's the anatomy of price, essentially. You're trading the open, high, low, and close. And then this is time, SMT as well, and that's all it is. Let's go to a couple of examples in defining our ranges to simplify it even further. Here we have a possible turtle soup. Now we're going to look at price first, then we're going to look at what time of the day is it, and then we're going to look to see if there is an SMT here. Price is being dragged down. March 11th, 2024. We're on the 4-hour chart. We're going to look at 4-hour candles. The open, high, low, close, power of 3. Accumulation, manipulation, distribution. We're going to look to the left. Is there any price is bullish, so we can look for a long opportunity based off this range of the discount. So we're looking at this range here. Now, look at this range here. Are we somewhere below discount of the range? We are. Price made a high. This is our low. Price is pushing down. Anywhere here, based off the range, we're going to want to long. Look for long opportunities. we have a couple of PD arrays here. We have a 4-hour BISI here and another 4-hour BISI right here. So on these occasions, before we dissect this further, if you were too long here, you can target half the range. So this was the low and high. You could see how the algorithm, specifically after making this low and creating a turtle soup right here, pushed towards the equilibrium of the range. Now, we know we're in discount, so let's look for a PD array. There's a 4-hour BISI right here. Great. We can probably look for a high probable turtle soup here based off this PD array. So anywhere in this PD array, we're going to look for a possible long. Now, which candle hit the PD array first? This one right here. And then New York opened right around here. So we're going to use, because we're trading New York time models here, you can use London and Asia as well, but we're going to use the anatomy of this candle right here, the previous candle before this one, before New York opened. And we're going to draw the open, which is right up there because it's a bearish candle. We're going to draw the close. We're going to draw the low. And the high. There's indicators that do this automatically for you, so you can definitely look that up, and it'll probably make the process a lot easier. But we're hand drawing it for this example. So this specific candle is the one we are going to observe, because when it comes to price, we're using the power of 3 and open, high, low, close. There's only so many. Think about it like this. ICT talks about daily profiles, daily profile templates. There's only so many ways a candle can form. And right here, this is one where it manipulated towards buy side and continued further down. But we're now at a PD array, so for this next candle, which is this one right here, we can anticipate a possible long, low risk long beneath the close now. Beneath the close, and even more so the low if we are able to purge this low. Okay? So we're using the 4-hour. Let's dive into the 15-minute real quick before we go to the New York time models. And we can see how everything is fractal. Now you can see how this low got taken out from that 4-hour candle. And we're looking at this candle now for the power of 3, open, high, low, close. Close, open, high, etc., etc. So we can get even more fractal with it. But don't confuse yourself. Keep it simple. Let's remind ourselves what's going on here. The range. We're in discount. We hit a 4-hour PD array. Possible long opportunity. Now, let's look intraday and see what's going on. So here we have, let me jump into the separate chart just to have that chart on the side to make it easier to understand. So here we have the chart, right? Remember, these are the 4-hour candles, and we're digging into a 4-hour BISI. Turtle soup. Now, we're using the anatomy of candles, and we're using specific times to enter a trade. New York open, 9:30. And then we're going to draw the close, which is way over here. Okay, so anywhere here, we're looking for a possible long. Now, we know the models. 955 to 1020 is Judas. And at this point, we're in Judas territory. So now we have time. Okay. We have the aspect of time. And remember, the 4-hour candles, that's the absolute low of the previous candle. This is the close, and that's low. So when it comes to price, anywhere here or even lower, we're going to want a long, because we're hitting a 4-hour PD array. So here's Judas. We have equal highs right after New York Open. Look at that. And then we have all this in confluence with each other. And then we're going to look to see if there is an SMT right here. To the right, we have the NASDAQ cash index. Same day, same time. And remember, we have our higher time frame levels. We understand the higher time frame candles and how they work. The open, high, low, close. We're going to want a long beneath the close and the low. Even more so, the low. So anywhere right there specifically. That's the turtle soup right there. You're essentially trading that area as a turtle soup. And when that happens, you now have time, you now have price. So what do you need next? The third ingredient to make this even higher probability in SMT. The 1002 candle to the 1013 candle, NASDAQ. That low was not taken out. 1002 candle to the 1013 candle. That is your SMT. Look at that discrepancy there. When the SMT occurs, smart money is telling you what they are doing. There is a discrepancy in price. They are telling you right in your face that there is going to be most likely a reversal. And I'm almost laughing because it's just really simple. It's just time, price, SMT. Wait for a low to get taken out, wait for a higher time frame PD array to get hit, and look for this setup here. And look what happens with that SMT. You're not looking at this low here. You're looking at the same exact times. So NASDAQ made that low on 1002. 1002's up here on the S&P. When you see that, and then you see this inversion, or maybe this inversion if you want to use that, put your stop, give it breathing room, give it some space, and look to target equal highs, or maybe, remember, you can zoom out and target 50% of the whole range and get those amazing turtle soup trades. Okay? That's essentially what a turtle soup is. We're going to go more into detail in lecture 2, but this is a beautiful introduction. You know the ingredients, and you know what to look for. In the next lecture, we're going to go a bit more in depth when it comes to the anatomy of the bodies and wicks. But that's essentially, to keep it simple, all you need to know about turtle soups. Wait for a high or a low to be purged, and look for an SMT. Okay? That's essentially all it is. And it happens all the time. It even happened right here. Look at that. Price pushed back up to the open of the 4-hour candle. S&P took that previous high. NASDAQ did not. High probable opportunity to short because you're in model 11 territory. So it happens all the time. Price is fractal, etc., etc. Time is fractal. This is a beautiful introduction, and I'm looking forward to lecture 2.